Today on Kitco News, we have Joe Foster, a portfolio manager over at VanEck Global. VanEck Global was responsible for launching the first gold mutual fund in the U.S. Joe Foster joins me now on the line from New York. Joe, thanks for being with us.
It's nice to be here.
Joe, it's the first time we have you on Kitco News, and I'd like to start off by getting your thoughts on the current state of the gold market.
Well, obviously, we're in the midst of a hard correction, and that's the way I think of it, as a hard correction. I think we're in the midst of an ongoing bull market in the longer term, but the sell-off has been very extreme. Gold stocks especially have taken a very hard hit over the last couple of years, and we're sort of thinking that we're probably closer to the end than the middle of this correction currently.
Joe, are there any fundamentals in particular that you are paying attention to when looking at the gold market?
Well, the number one thing in my mind is the redemptions out of the gold bullion ETFs that's ongoing. We started seeing redemptions in these ETFs back in February, and it's gone on ever since. And I think until that selling activity stops, I think gold is going to continue to struggle. So that's the first thing we look at when we look at the fundamentals.
And how much of that offload, Joe, do you think was converted into physical buying?
I think a lot. There's no telling how much, but we've seen tremendous buying out of Asia, China, India earlier in the year, the Middle East. So a lot of that Western gold bullion is flowing eastward as physical gold.
On that note, Joe, the World Gold Council predicting that China will surpass India as the world's top gold consumer. They're expected to import over 1,000 metric tons of the metal. Does that news surprise you?
No, it's a trend that's been ongoing for several years now. We feel that the Chinese central bank is probably accumulating gold. Chinese consumers and institutions are also increasing their allocations to gold, and the government is promoting gold as another type of investment in that part of the world. So it's not surprising, and I think it's a trend that will continue.
If we're looking at a one-year outlook, is it correct to say you're bullish on the metal?
Yes, we are. Again, gold has taken a very tough hit. There's been a lot of selling, a lot of technical selling, momentum players falling into the game here. And I think all of that pressure has probably reached a crescendo this summer. And I think as we move into the fall, we'll start to see the gold market start to act better for us.
Goldman just released their outlook yesterday for gold, and they were calling for $10.50 gold by the end of 2014. We've seen other bearish statements. What do you think of these when they come out?
Well, if you look at the all-in cost of producing an ounce of gold globally, the average, our calculations show the average is around $1,030 an ounce. So that's just an average. A lot of mines are producing gold at higher costs, and we've even seen a couple of mines shut down of the smaller producers this year. So I think if the price stays where it is or it trends even lower, we'll see a lot more gold staying in the ground, not making it to market, and that should provide a floor for the gold price. And I'm thinking that floor should be closer to where we are today than the $1,000 that people have been throwing around.
And earlier this week, we saw a news item that reported that U.S. gold mine output has fallen 5% as of April. So let's talk about those gold companies now. We're seeing a lot of quarterly results come out, and most of them in the red. What do you think we'll see on the mining landscape? A lot more mergers and acquisitions, juniors disappearing?
I think the industry is entering a period of austerity. That's a common word used in many circles these days, but it's hitting the gold sector. We're going to see companies rein in their capital spending, reduce costs wherever they can, reduce headcounts, and try to cope with these low gold prices. But the thing to remember is, here we are at $1,300 gold, and these companies are taking these measures. So, they're already really cutting back severely on their spending. At the end of the year, we'll probably see some more reserve write-offs. So with the industry in austerity mode, I think that's going to support the gold price and set these companies up for better financial returns in the coming year.
Do you see this then as a buying opportunity for mining stocks?
Yes, I do, because first of all, they're technically and fundamentally they're oversold. They're trading at valuations we haven't seen in many, many years. We normally see these valuations in severe bear markets or the crash in 2008. So the stocks have been oversold, and I think all we really need is some positive momentum in the gold price to see these stocks really come to life and generate some decent returns for us.
And what do you look for when you're picking a stock?
Even in these times, the first thing we look for is growth. Companies that have projects that can be developed even at current gold prices, because those are the companies, if they can deliver that growth on time and on budget, then those are the companies that will command a premium valuation in the market.
Do you prefer companies actually mining over those still in an exploration phase?
We have increased our weighting to the miners this year as a result of the lower gold prices. That said, we still have a generous allocation to development companies with projects that make sense at current gold prices.
And if you're bullish on gold, are you bullish on the other metals, silver, platinum, palladium?
Silver, yes. Silver is a monetary metal like gold, and we expect silver to move in the same direction as gold. Platinum, palladium, we're not as bullish on. Those are more industrial metals. And for us, as primarily an equity fund, we don't find the platinum producers as attractive as the gold or silver producers.
Before I let you go, I'll ask you to pinpoint a trading range for gold from now until year end. What range are you looking at?
I think we will trend higher as we move through the fall months, and I'm expecting the trend to move towards $1,500 an ounce by year end or early 2014.
On that note, thanks for your thoughts.
Thank you.
And thanks for watching Kitco News today. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Cambonen. Thanks for watching.